Another pension fund destroying your pension. Let's have a look at the St. James's Place balanced managed account. Sounds positive. Balanced managed account. Okay. Well, after 5 years, you pretty much got the same as the benchmark. And the benchmark is something which you could just track anyway. That's not what worries me. You might say, no, come on, Alpesh, up 7% in a year. Well, my bank interest, risk-free, gets me 4.5 to 4.8% in a year anyway, risk-free. And in a year where the Nasdaq and the S&P are up 30%, being up 7, you'd have to be really incompetent to be able to do that poorly. But it gets worse. Let's have a look what's in it. Its biggest holding in the St. James's Place balanced fund is another St. James's fund. So the first fund takes a load of fees and then buys another fund from the same company, giving that fund lots of money, and that fund takes another tranche of fees going to the same company. They're double dipping. You see, it's all very well if they just buy, say, Royal Dutch Shell. Fine. The fund takes some fees, it buys Royal Dutch Shell. Great. What they've done is invested in their own fund and charged you twice. Once at the fund level, second at the investment level. That's a con. I wouldn't mind. But the fund size is £3 billion. Now, don't get me wrong. If I had a £3 billion fund, I am sure I too would be tempted to take that 3 billion and say, hang on, why should I just buy some stocks? Why don't I put 14% of that in one of my other funds and give them several hundred million in assets, and then take that fund and go around and say to investors, hey, this other fund has got several hundred million in assets. Oh, and by the way, all the while, I'm performing incredibly poorly in any event, because in all that time I've underperformed the benchmark. I've certainly underperformed both this year and over 5 years what a broader market index would have done and a tracker through an exchange traded fund would have done. Anyway, so that begs the question, what might you want to do? Please have a look at my campaign for $1million.com. The reason I do these videos is I have a campaign to teach 1 million people how to become better investors. I've taken it to the BBC, I've taken it to basically all the media that I do from my Bloomberg TV days. I've taken all that knowledge, put it in here, my 18 books, my Financial Times columns. If you look at campaignfor1million.com, there's free resources and education on there to teach 1 million people how to become better investors and add an extra million to their pensions across their lifetimes. You can due diligence me on LinkedIn. Oops, there I am. Okay, and you'll see a whole bunch of articles about all of this as well, and the variety of things that I do around investing and have done for many years. As a hedge fund manager, providing this information is pretty straightforward and easy, and if I'm being tough on these guys, it's because they're incompetent and they're ripping you off. Okay, it's as simple as that. Do have a look at the campaignfor1million.com. Thank you very much.